So yes, this question came in from Rex via email, and he said, or generally he didn't say this, but the stock has done quite well over the last year, up about 74%, and it's up 280% over the past 5 years. But we'll look at the long term as well. So Cameco CCO on the TSX currently trading at a price of around $56 and about a $24 billion market cap, and a dividend yield of just 0.2%, and it's an annual dividend frequency. You don't see that too often. So Cameco is a pure play uranium producer headquartered, like I said, in my hometown of Saskatoon, Saskatchewan. The company has two segments, which include its uranium, which is 85% of sales in the most recent quarter, which includes exploration, mining, milling, and sale of uranium, as well as fuel services, which is 15% of sales in the most recent quarter. And this involves the refining, conversion, and fabrication of uranium concentrate and sale of conversion services. So, Cameco has mines in northern Saskatchewan and the United States, as well as a 40% interest in the Inca JV with Kazatomprom, which is majority owned by the Kazakh government, of course, in Kazakhstan. Now, other than the JV in Kazakhstan, only two of Cameco's mines are operating, which are the Cigar Lake and MacArthur River. Now, operations at the MacArthur River and Key Lake had been suspended in 2018 due to deteriorating market conditions, but management resumed them in November of 2022. Now, the Rabbit Lake operation in Saskatchewan was placed on care and maintenance in 2016, which it remains on. And Cameco's operations in the United States include Crow Butte and Smith Ranch Highland. But again, both are not currently producing, as the decision was also made in 2016 to curtail production. And as I said, its second segment is fuel services, which supplies much of the world's reactor fleet with the fuel to generate electricity. And these facilities are within Ontario. So, over the long term, revenue and earnings have been on a declining trend due to the persistent decline in the price of uranium, which led the company to place several of its mines on care and maintenance in 2016 and 2018 to curtail supply and help the weak market conditions recover. And since then, the price of uranium has been on a recovery, and as such, so has Cameco's stock price. And I actually include, there's a little graph here if you're watching on YouTube, the price or the spot price of uranium. Now, looking at the last quarter, Q3 of 2023, reported in October, revenue was up 48% year over year to 575 million. Net income was up to 148 million compared to a loss last year, and earnings per share was 34 cents compared to a loss of 5 cents for Q3 of 2022. Now, the balance sheet is healthy currently with about $2.7 billion in cash, just under $1 billion just under $1 billion in debt, and net cash of about 1.7 billion. Now, right now, the business trades with a trailing PE of about 90 times and about 45 times trailing price to cash flow. But of course, these are elevated due to the recent run in Cameco's stock price and given the increase in price of uranium, which higher prices will be realized over the next few quarters, assuming that the price of uranium sticks around here, compared to the trailing results. So, in theory, the forward multiple should be more reasonable, but we just do not know how much more reasonable, of course. And if we annualize the last quarter, the price to earnings multiple would be closer to about 40 times. Now, at the end of the day, though, the price of Cameco will go where the price of uranium goes, as shown by my overlay chart here, with Cameco stock in the blue and uranium futures price in the orange line. So as you can see here, if uranium does well, Cameco stock will do well, and vice versa, of course. Now, just to finish up here, management said on the durability and demand, the durability of demand and supply. Climate change targets need nuclear to achieve net zero. Policymakers are embracing nuclear, which they said that they haven't really ever seen before at this pace. Now, Asia's nuclear expansion is beginning to move beyond the region into Europe and America. And energy security is also driving growth, of course, with kind of the geopolitical tensions that we're seeing around the world and just the need for countries and energy security in general. And the CEO made the comment that demand for nuclear power is driving the best fundamentals we have ever seen for the nuclear fuel market. And I thought that I'd also bring this up, the acquisition of Westinghouse Electric for $7.9 billion with Brookfield Renewable, where Cameco will own 49% and Brookfield will own 51%. The acquisition was announced a year ago in October of 2022, and it just received approval from regulators last week and is expected to close this week. Now, Cameco will finance its share of the acquisition with $600 million in its term loan available, as well as available cash. So once this closes, Cameco's balance sheet should change significantly. But it is an interesting acquisition as it provides more nuclear capabilities to the company, including energy system and reactor technologies, engineering and manufacturing, and more. But to conclude here, personally, I like the long-term trend of uranium and its importance to combat climate change and ensure countries with energy security. But over the next decade, I have no idea if this will translate into a positive stock performance. Now, it appears that there are some tailwinds for the sector. But again, at the end of the day, the stock is tied to the price of uranium, and its balance sheet is about to change drastically following the closing of the Westinghouse Electric acquisition. And we cannot forget that from 2004 to 2020, Cameco was not a great investment, driven by very weak market conditions. So if someone thinks the price of uranium will continue to perform well over the long term, you could consider Cameco, but I believe that it, is generally speculative just based on the commodity itself. But if you wanted to take a position, just because of your thesis on the price of uranium, you could. It's speculative. Make sure that if you did take a position, it's a small piece of your portfolio. You definitely wouldn't want to take a large, 5% or even 2.5% of your portfolio. I think that hedging the position size would help mitigate that risk. But it's definitely not one that I'm adding to my portfolio at this time. And I'll open it up to the gentleman.
Yeah, I mean, you sum it up with many commodity-based businesses. It so goes the price of the commodity, so goes uranium, so will go Cameco. So
Mhm.
if uranium stays in its current range, does well this year, Cameco follows suit. If uranium's down 30% next year, Cameco's shares likely, are going to be, it's going to be tough to see them perform very well in the year. So,
Yeah, and even
I
just
mean, if you want exposure to uranium, this is a company,
mhm.
a leading company in the sector. There is some exposure right there. It's going to be volatile with the price of uranium.
Yeah, and even just looking at the
I'll just say that I'm actually impressed with how closely it follows the price of uranium
yeah,
because we've
It's
done
it's
work
crazy, right?
yeah,
on gold mining stocks, and they typically don't follow the price of gold that well. But
mhm.
it's to the detriment of somebody who wants to have exposure to gold. So it is actually a good investment for exposure to uranium if that is
Yeah,
what you're trying to do.
Yeah.
yeah.
And just reading in the conference call, they're talking about, oh, this cycle is different. This one, has all these factors behind it. But, we hear that, many, many
They're always
times. And
different. I mean, I've heard that just about
exactly.
uranium several times
Exactly.
in my investing career, and it's just
You hear the super
that's
cycle
always what
and
the
whatnot all the
yeah.
time.
I mean, I will say that we've done work with our electrification report, and I was looking at I was tasked with the job of looking at renewable power producers and getting together some research on that. And the forecasts are that 90% of new electrical generation will, over the next 5 years, I believe it is, be from like non-carbon sources. But
Mm-hmm.
a big chunk of that was nuclear, actually,
Yeah.
so not
Yeah.
just renewable.
Mhm.
Yeah, and to me, if it can be done, more safely over time, find unique ways to dispose of waste, it makes sense. But
There's actually
where the price of uranium goes this year or next year, you know,
there's
we're
as a
launching
bit of
it
an
into
aside,
space. Are you?
I recently watched a couple episodes of this series called Chernobyl on
Mm,
HBO, and
yeah.
I mean, obviously a completely different situation, but it's pretty scary when things go wrong.
Totally.
Yes, it is.
Yeah.